Good morning, everybody. It's Monday, the 9th of November. We're Signal Centre Talking Ball. I'm Joe Neighbour, and I'm joined by Ian Coleman, Steve O'Hare. How you doing, guys?
Yeah,
Very
good.
well,
Thank
you?
you.
Yeah, not too bad, thank you. How was your lockdown weekends?
Oh, wasn't good actually.
No?
I ended up at IKEA on Sunday morning.
Is that still open then?
Yeah, they do
Just
the
essential
click and
shopping.
collect. The click and collect
Ah.
is still open. So, but also
Building
funny
shit.
enough, they had the restaurant was still open as well. Just
Was it
for
takeaway
refreshment.
food?
Yeah.
Okay.
So,
Did you take away some meatballs then?
I didn't in the end because when they came round, it offered me a free coffee, and so I thought, oh, I'm going to get a free coffee. And as I went to get it, I got my text message saying, "Go to Bay 18 and pick up your stuff." So I thought, I'm not going to mess that up. So I went, and then spent about 3 hours putting it all together. So
Yeah, it's lovely, isn't it?
Classic.
yeah,
We
But
went
you
last
know-
week, actually.
Lakeside?
yeah. Tina helped me with that, so that was a result because otherwise I'd have been all over the places with the wrong screws or the wrong hole.
What time did you finish then?
Oh, I didn't finish till about 5:30, 6.
Oh, bloody hell.
Yeah. 2 big wardrobes.
So you missed the Liverpool game, did you?
No. That's sorry. Yeah, I'm wrong. I finished at actually 4:25.
Oh, that's convenient.
Down tools. Luckily, I just managed screwing it to the wall, and then Connor shouted up, It's 22 minutes past." All right, so which was quite a good
Tate,
game.
you can finish this off.
Yeah. It was a good game though. First half was really good. Second half was a little bit slower.
Yeah, I didn't really want to get onto a football chat, if I'm honest, but we
better
could. Fucking dreadful. Anyway,
markets.
so yeah, markets, and over the weekend, obviously, we got Biden. So the media confirmed that he was now president-elect, although Trump is refusing to concede defeat. Another barrage of tweets over the weekend about various rigged election claims, and I know Fox News are very much in on it, and he's posted a load of videos to his feed today or overnight about certain things that they're calling out. Still no hard proof, it seems, but you know,
It doesn't look like he's working too hard at it. He's had 2 rounds of golf, hasn't he, in the last 2 days?
Yeah. I think he's had 285 rounds of golf since he's been in charge, or something like that, or something crazy.
It's more than I've
Pretty
had
good
in a
going.
lifetime, I think.
Yeah, it's good, isn't it? Okay, so now that we can sort of, I guess, push the election thing out of the way, knowing that that's sort of done and dusted, we're back to sort of Corona and Covid-19 and what that's doing. Worldwide infections surpassing 50 million over the weekend, and the UK has hit 20,000 cases for the 6th straight day. Italy has posted its 5th day above 30,000, and Belgium and France look to be in a bit of bother as well, with a lot of pressure on the hospitals starting to build. We also have Brexit ongoing as well. Talks are resuming in London today. A bit of concern about that because Biden is sort of pro-Remain, I think, and he's sort of been
Claiming to be Irish, isn't he? And that
I think one of his grandfathers was Irish or something. So he's there's a bit of panic about whether or not he's going to kick up about a trade deal with the UK and the US. Still talking about obviously fisheries and regulations between Britain and the rest of Europe, and try and obviously get something done. I think there was a quote from Boris over the weekend saying that there was still significant differences between the two. So that's
well, we did
not
mention
looking.
a few weeks ago, didn't we? We said that if Biden got in, then the UK might have to bend the knee a little bit to get a deal done this week. So it'll be quite interesting, I think, what comes out. Yeah,
I mean, we'll come on to some charts shortly, but sterling looks like it's under a bit of pressure today. Looking at indices, they all look to be pretty buoyant, given the, I guess, the removal of uncertainty from the whole election thing, and seems to be pushing higher. So, who wants to take over the charts and give us a quick rundown on some bits and pieces?
Yeah, I can hold my hand up and admit a small defeat in the war. I've lost the battle, but the war's far from over. Let me take some of these fibs off because They're irrelevant at the moment. They're just for the measuring where the retracement will happen. This is the previous all-time high, 12,467 on this chart, on Forex.com's chart. This is the weekly chart, and we can see the right shoulder has been taken out in this head and shoulders formation, so that's no longer relevant.
Head's
And
cut off.
yeah, and we're sort of looking at this as the next major level to test. We need a clear close above this level to basically get back into the bull trend, as far as I'm concerned. So I expect to see it tested in the not too distant future. We're about 150 ticks lower than that at the moment, trading at 12,345. So not far away. Let's get it tested and see what happens, whether this bull trend continues. And obviously, I'm going to watch it very carefully. So I'll really look at the daily chart. We've broken obviously above the short-term trend line that I drew in. That's clearly broken. Let's get rid of that. That was a load of rubbish. And yeah, there's the level I'm watching now. In an ideal world, if you're still feel as bearish as I do about the whole indice landscape, I would look for a retest of this, and then a negative candle, a correction candle on here, a reversal candle of some sort. So that's the one I'm focusing on this week. I'll keep an eye on it. I haven't done too well on the gun to head because of this. So, but also let's look at the FTSE. This downward trending channel has been quite key, and we're testing it this morning. So we're trading around the 6,000 level. That's a psychological area. We can see two swing highs back here at 60.41 and 60.39. And this morning we've got up to 60.14. So quite positive at this point in time, and need a close above where we're trading now, or around about 6,000 to confirm a break of this channel. On the we can see the sort of like the bullish inside candle on the DAX. That's again on the weekly chart, but we are approaching some resistance on the Ichimoku cloud. So yeah, still we're basically teetering on these levels of pivotal levels, I would call them, flipping between bullish and bearish. I'll look for a rejection if you're bearish, and obviously a clear break of the 12,840 level, and we get this blue line crossing over the red line here. That'd be a buy signal in the Ichimoku cloud trading system. CAC has clearly broken it, but it faces heavy resistance above. So that's pretty much it. I don't know if you want to cover commodities, Joe, or
yeah, I'll have a look at the commodity chart, unless you've got something ready or drawn in.
No, I haven't really. I mean, well, I've got lots drawn in. Obviously, with this this reaction from this level here, we've got it's almost a reverse head and shoulders formation. Although the sell-off that wasn't really a trend. That was just a reaction lower. So it's not a clear head and shoulders formation, but could be a double bottom here, which is confirmed, or even a treble bottom if we get a break of this level up here above $2,000. But yeah, it still remains quite positive. Good. If you're bearish, you know, there's good risk reward levels to get short above. But we've been bullish on gold for a long while now, and buying dips is still the way to go for us, I think.
Yeah, definitely.
So last week's candle was a bullish engulfing candle, so it's very positive, and it has clearly broken the 1933, 1934 level. So that's where I'd be looking to buy dips if it does pull back. But yeah, pretty positive this morning, and it's still sort of like the obviously we've got the dollar weakness, which has been the main cause of it. The bearish outside candle on dollar last week. Ooh, look out! Doesn't look too clever, does it?
No. Oil, got any view on that?
Oil.
I mean, I've been looking a bit at that. I don't mind.
Yeah, I mean, overall, yeah, you can't carry on, but overall, I'm bearish. We sort of get this reaction. The lockdowns are going to continue for not just for the next 4 weeks here, but obviously across the globe. There's going to be a big impact on travel. So oil is going to really struggle to sort of clear the $44 area. So I remain sort of selling rallies for me is the way to go at the moment.
I think so. I mean, I've got the chart up at the minute, the daily chart. So I've got this big top pattern that I think is playing out. Big band of resistance here, as you can see, between sort of 41.72 to 43.84. And I think while below those levels, it is a case of looking to sell into rallies. We've seen a decent reversal last week. People getting bullish ahead of the expected Biden win. Pushed decent, nicely to the upside, but making still lower highs. And last week on Friday, we saw a close below the 10-period moving average after this push higher. For me, that's a decent sort of signal that momentum is shifting back to the downside. So I'll be looking to sell into this rally that we've seen this morning. If we take a look at the hourly chart, let's get rid of these drawings. So we can see that obviously we've had this push higher, but now we're sort of selling off again. So I think another potential top pattern forming on an even smaller time frame there. I just draw that in. Something like that taking shape. So if we break through this support here, 37.38, then I think it'd be a case of heading back down to these lows that we saw at the start of the month, around about 33.80. So that would be my view on oil today. Right, Ian, do you want to take us through some FX charts?
Yeah, but pretty critical point, I think, for the dollar index. So numerous different time frames. This is the monthly chart. So are we using this reverse trend line as support? We've got a bullish outside candle, which was posted back in September, which we shouldn't ignore, which offers a long-term positive bias for the dollar index. But this is where it all gets a little bit. So we've got some bullish factors and we've got some bearish factors. The bearish factor was this chart last week, and it's pushed lower. It will normally make 127.2% of the whole formation. So I don't know if this is really completed yet, because we've got 92.04 down here, but it could come up. I think it really needs to break 92.47, which is the previous support, now becomes resistance, to get a bit of power to the upside. But for me, it's bullish. So I'd either be buying a dip down to here, or I'll be buying a clear break of there. Why I'm saying it's a little bit mixed is because we haven't really got down to this confluence zone on the weekly chart. So I'd prefer to see another dip at least to take out that previous swing low to get really positive on the dollar index. But like I said, it is a mixed picture, and if we look at the daily chart, we go on about this quite a lot. The 88.2% pullback level of this swing low. So basically A, B, B, C, and trying to get long there offers extremely good risk reward if you believe that's a base, because you're looking at sort of highs up around it here. So it is looking quite mixed, and that even becomes a little bit clearer when we go to the likes of euro dollar. So the long-term bias is still bearish. It's obviously reverse of what happens in the dollar index. We've charted this out. So basically these are these A, B, C, D or ABC formations. So free wave pattern, and then we move lower. Now the fact that this has broken the C leg, it could indicate that that's the top, but going to this chart, normally completes at 261.8%. So there's nothing to say that we might just move lower, get spoof out a few shorts, hit some support round about here, and then move higher as that dollar index sell-off completes. So yes, it could be a top, but I think I prefer to sell up around these sort of levels than at current price. And then the others are pretty similar. There's possibilities. We've hit a 127.2% fib in dollar Swiss, but if we look at this time frame again, the weekly chart, it's got scope to go a little bit lower. before I'd look at buying into it really. Aussie dollar. I mean, the commodity currencies do have a tendency to move first. It's regarded as where the smart money is, and if we see here, yes, they are starting to come off the top, but again, this is the 8-hour chart. We really haven't got any confluence zones until a little bit higher. So I think there is scope that this could just be a knee-jerk reaction on a Monday morning to the news out of the US, and then we'll get a bit more of a dollar sell-off with stocks potentially moving lower, and then we'll get a reversal in sentiment. And New Zealand dollars are pretty similar as well. So it's two different sell zones in this. So I'm not sure, put it that way, if the dollar sell-off is completed. The only one that I quite fancy, and I'm going to do it for the gun to the head, is dollar CAD, because I've got a decent chart on oil as well.
I was going to do that as well. Dollar CAD, yeah,
for a sell-off.
Okay, well, let's move on to the gun to the head from last week. So for anyone new watching, we make 3 calls live on the show, and we make a prediction about where we think they'll go between right now and 9 o'clock at night when we close them off. We register all the profit and loss, and we run a simulated account whereby we take we start off with £1,000 and we risk 1% of the pot per trade, so risking up to 3% per day. This is how we're looking overall. Been a choppy couple of weeks, which I think is understandable given obviously the macro events that have been going on. So we're off of the top at the moment. In terms of how we performed on Friday, I think we had 2 stop outs. So what do we have?
Mine was a stop out, Dolly, yeah.
I went short of Euro stocks 50 and lost 7 ticks, or 0.19R. Steve was short of Nasdaq, lost 1R.
That doesn't look right.
Lost 2.64.
Yeah, that's outrageous.
It is a little bit, isn't it?
Yeah, a bit naughty.
Get the books again.
Yeah,
no wonder that doesn't look as severe now, does it? Nice one. What's going on there then? 103. There we go. Right. Okay. So, 2 stop outs, 1 small loss. Let's get back on the winning run again today. Who's got a trade idea ready for us?
I'll let Stevie go first. If he's taking dollar CAD, I'll take oil.
No, I was joking about dollar CAD. I was just jumping on your back, mate. I just wanted to sort of try and spoof you into sort of worrying about my call. Obviously, if you'd have done dollar CAD first, I would have done it as well. Interesting today, we've got a couple of analysts that we're looking at doing some stuff at the moment. And
you're nicking their ideas, are you?
Well, you know what? They both came up with the same idea this morning. Funny enough, it goes against our intraday trade, and they're all euro dollar, because euro dollar for me is one of the most difficult markets because you have so many things that influence and impact on it. So I thought I'd rather, I'm no good at euro dollar, so let me listen to something else. And 2 out of 3 of them were negative, selling a break around these levels. So I'm just going to go with them. They sort of, like, we're talking about the momentum stalling, which you can see here on the hourly chart. It's stalled a little bit, overbought, which we can see here the sort of we got bearish divergence on the 4-hour chart, as you can see, looking for a crossover here. So fair enough reason. Hanging man candle on the 4-hour. Obviously, the one thing that would put me off on a more longer term basis is this bullish outside candle on the weekly chart. But again, maybe that's why I get caught out on the euro dollar, because maybe I'm looking at the longer term formations when I should be looking at the real short term stuff. So anyway, I will go and sell euro dollar, which is actually buying dollar, which I don't like, but hey ho. I'll just not take anything into it. I'm just taking the advice of the guys this morning, and we'll so if it does stop out, it's not my fault. Just understand that. So what's that? 70. Let me just 300, and let's go for a little move down to here, which is a nice 5-to-1 risk reward. The stop is quite tight, 119.07. We're getting in at 118.77, and we're targeting 117.27. There we go. Let's see if these guys come up with a good trade. If they come up with a good trade, we'll hire them. If not,
Yes.
See you later.
You're fired, in the famous words of Donald Trump.
Yeah, go on, Donald.
Okay, Ian, you ready?
Yeah. So this is oil, 1 hour chart. So that's the sell-off from is it Friday's high, 5th of November, and it's hit this 38.2% pullback level, and we've seen a reaction to the upside. The reason that I like these fib levels, these short fib levels, if you like, is that you get numerous, or you'd have a tendency to get numerous target levels. So the first confluence area is down here, which would make it quite a decent R, but you've got the potential of coming all the way down here to get a confluence area, which is around about $30 in oil. And if you look back at, which chart is it? Not that one. I think $30 is quite important, basically. So on a larger time frame, you're then getting towards this fib, which is again the 38.2%. So I think we're going to see a sell-off in oil, and because of that, I'm going to take a dollar CAD long trade. I've already explained the view on the dollar, but again, I like this in a couple of time frames. First time frame is this one, which is a 4 hour chart. We've got a confluence area here, which is a slightly disjointed crab formation. This AX leg should be at 161.8%, not 127.2, but I still like it. And the reason that I like it is that if you go to this time frame, which is the daily chart, this is the 88.6% fib. So this formation gets taken out just below here at 129.80. So you've got limited risk for potential extremely good reward. So on a long-term trade, I like this as well as a short-term one. So I'm going to get long at the market, he says. I'll just target up here somewhere. I'm more worried about the stop than the target today. So 130.16. I said 129.80 is the stop. And I just leave an open target. So if it gets up here, it's 8R.
So 132.98 just for record keeping
yes,
purposes. Go with that.
Yeah.
All right, lovely. Okay, good luck. I am going to take a look at Australian dollar versus the New Zealand dollar. It's not a market I generally like trading because I think the currencies are sort of fairly similar. You don't really get too much out of them either way, but bit of a bearish channel going on here on the daily chart. And in recent days, you've seen a decent push up from this support down here and hit a 50% fib level from this swing high here down to this swing low. So got a bit of resistance here, posted a decent sort of reversal candle on Friday. If I take a look at the hourly chart, what I can see is a head and shoulders top taking place there. So it's not exactly perfect, but just sort of squinting, can see a little bit of head and shoulders taking place there. So I'm going to sell it now. It hasn't completed, by the way. I'd need it to be below 1.0690 to complete. So it's a preemptive trade today, selling at 1.0699. Stop loss at 1.0716, targeting a measured move of this head and shoulders down to here, which is 106.20, so 4.65R if that plays out from here. We shall see.
Lovely.
Economic calendar is pretty quiet today after obviously a busy couple of weeks. We do have a number of central bank speakers today, though. We've got Christine Lagarde, we've got Andrew Bailey, we've got Haldane as well from the BOE, and Mester from the FOMC, all making appearances throughout today. So we could get some headlines out throughout the day with regards to what central banks are planning over the coming weeks and months. aside from that, I think that's pretty much everything covered.
Lovely.
Anything else, gents?
No, all good.
No.
Great. Okay. Well, good luck with your trades, and we'll catch you all tomorrow morning.
Yeah. Enjoy.
Ta-da.
Cheers, Em. Bye.